The AI space has seen its first major IPO this year. So, how did it go? Welcome back to the AI Daily Brief Headlines Edition, all the daily AI news you need in around 5 minutes. We kick off today with another big story from Friday. Our main story is about XAI combining with X. This one is about CoreWeave's IPO, which unfortunately turned into a bit of an anticlimax. The company's stock dropped by 2.5% at launch on Friday after fundraising targets were heavily downsized. CoreWeave raised $1.5 billion from the share sale, but had initially priced the IPO to raise over $2.7 billion. At one point in the planning phase, the stock was to be priced at $55 per share, but ended up going out at just $40. The stock ended the day flat, closing at $40 and receiving no IPO pop. Bloomberg sources said that half of the shares went to the 3 largest investors in the deal, with 90% going to the top 15. One of those large investors was NVIDIA, who took a $250 million allocation to add to their pre-existing 6% stake in the company. CEO Michael Intrator said that without NVIDIA, the IPO, quote, wouldn't have closed. He also added if 27 others didn't show up, it wouldn't have closed. And while the headlines are calling this a dud of an IPO and pointing to CoreWeave specifically and AI more generally, what Intrator's pointing out is that this is a terrible moment to go public. The NASDAQ index also had a 2.5% overall drop on Friday, contributing to a 13% decline this month. Risk assets have been struggling mightily in a market that is characterized by insecurity and volatility, and hyped-up tech IPOs fall squarely in the risk asset category. Now, to the extent that people are looking at what wasn't working about the IPO in the context of CoreWeave and AI rather than larger market volatility, people are reading this either as a potential signal for an AI infrastructure bubble, or they're pointing to some idiosyncratic warning signs in CoreWeave specifically. On the AI bubble conversation, CoreWeave co-founder Brandon McBee is dismissive, saying, "This conversation around an AI bubble seems to come up every 3 to 6 months or so, and then it drops away. What we see on the ground and what I'm sure you're hearing in Silicon Valley is just consistent growing demand." Obviously, if you're a regular listener to this show, you'll know that that opinion is much closer to my view than the idea that there's some massive bubble just waiting to deflate. The CoreWeave specific problems might be a little bit more difficult to brush off. CoreWeave already has quite a bit of debt and may need to raise more to make up for the shortfall in the IPO. That is, of course, if they actually needed that capital. The company faces repayments of $7.5 billion by the end of next year, although they could also be able to refinance. Like many companies in this AI infrastructure space, they also have a highly concentrated customer base. Microsoft represented 62% of their revenue last year, with a further 15% coming from an unknown single large customer. Microsoft has already walked away from their option to extend leases with the company. However, CoreWeave did seal a big deal with OpenAI in the lead up to the IPO. Bloomberg's Dave Lee commented that unlike other big cloud providers, CoreWeave really doesn't have anywhere to hide. He wrote, "While CoreWeave has some unique vulnerabilities, the bigger picture here is that its accounts will finally lay bare in quarterly reports the brutal economics of an industry that is burning through an unprecedented amount of cash in pursuit of some kind of lucrative application nobody has quite figured out yet. CoreWeave can't obfuscate growth in AI services by burying the numbers within its filings or offering imprecise measures of growth during calls with analysts. Nor can it hide the interconnectedness of the industry, where a handful of huge companies are simultaneously customers, suppliers, and rivals to one another. If a bubble is forming around AI and data center build-out, as Alibaba chairman Joe Tsai warned this week, it's on the balance sheet of CoreWeave where the clues might emerge, written for the first time in plain black and white for all to see." I continue to be skeptical of this type of analysis, but if for no other reason than as a meta understanding of where the market is, it's worth noting this is a fairly common opinion. Speaking of IPOs, Perplexity CEO Aravind Srinivas is denying that the company is under financial pressure and needs to rush to an IPO. A few days ago, a Reddit user called Nothing Ever Happened aired out a theory on Perplexity's subreddit, writing, "I've recently noticed Perplexity making lots of changes to cut costs. My theory is that they're doing horribly financially. Those charges included an insider telling them that all funding for marketing and partnerships has been paused, some gremlins in the service that led them to believe cloud services had been migrated away from AWS, rumors of an IPO, and layoffs which the Redditor discovered, quote unquote, by digging into LinkedIn profiles and finding a lot of former employees. The key complaint were changes to how the services uses auto mode, which now removes model selection from the user during follow-up questions. The Redditor claimed that their follow-up questions were always answered by the default cheaper model, rather than a high-end reasoning model like OpenAI's O1. Unless we think that this is just one complaining user, Perplexity CEO Aravind Srinivas took to Reddit to post a response, which he also copied over onto X as well. Now, he didn't reference the original post, but did give some plausible explanations for each of the points and included several others addressing complaints about degradation of service. Regarding auto mode, Srinivas claimed that it was a UX improvement to remove the model selection and follow-up questions. He wrote that the goal is to, quote, let the AI decide for the user if it's a quick, fast answer query, or a slightly slower multi-step pro search query, or a slow reasoning mode query, or a really slow deep research query. The long-term future is that. An AI that decides the amount of compute to apply to a question, and maybe clarify with the user when not super sure. Our goal isn't to save money and scam you in any way. It's genuinely to build a better product with less clutter and simple selector for customization options for the technically adept and well-informed users. This is the right long-term convergence point. And by the way, I will say at this point that one of the big UI UX complaints around these services has been model selector type of issues. This is something that Sam Altman and ChatGPT have discussed extensively as well. Users hate the fact that they have to look through and understand which of the models is good for different things. So I don't think it's some conspiracy theory to think that Perplexity, which is an extremely UI UX focused company, is just trying to improve that part of the experience. Now, maybe more pointedly, was this paragraph from Srinivas who wrote, "Are we running out of funding and facing market pressure to IPO? No, we have all the funding we've raised and our revenue is only growing. The objective behind Auto Mode is to make the product better, not to save costs. I've learned it's better to communicate more transparently to avoid any incorrect conclusions. Re-IPO, we have no plans of IPOing before 2028. Ultimately, when it comes to Perplexity, I think that their bigger challenge is that every other frontier lab also wants to be the gateway to search. They're all working to improve not only their underlying models, but also their search experience. That, more than any potential cost savings from auto model selection, is going to be the challenge that Perplexity has to overcome. As of recent notes, Perplexity claims that they've crossed $100 million in annualized revenue. I still remember the days when that would have been impressive, but I guess we now live in a world where AI is just growing so fast that even that can't stem rumors. For now, though, that is going to do it for today's AI Daily Brief Headlines edition. Next up, the main episode.